China said tomorrow, we're not going to use dollars, all of their private sector defaults. So what it tells you right now is the world doesn't have enough dollars. And so they then have to create more liquidity to get out of this situation. So right now, crypto as an asset class is $2.5 trillion. If I just use the log regression channel of Bitcoin and just project out the growth rates of crypto versus the internet and assume it slows down massively from here, it gets to $100 trillion.
You've got like 90% of your portfolio in Solana. Is that true? Like
Yeah.
you put 90?
Yes. And 100% of my liquid net worth is in cryptocurrencies.
Herzlich willkommen zum Pure Alpha Update. Nach einigen technischen Schwierigkeiten, die uns jetzt 10 Minuten gekostet haben, gehen wir einmal durch. Interviewgast Raoul Pal braucht keine, keine Introduction. Er ist einer der wichtigsten Thought Leader im Crypto-Space und damit starten wir direkt durch. Nice to have you, Raoul. After having some technical issues, I'm very, very delighted to having you here. It's so great to have you. You know, we've already started the last conversation, then it got interrupted because of technical problems. I know that's how it is.
I live on a small island in the middle of nowhere. So sometimes if my Starlink goes down, we're in trouble. So let's hope it holds up. Yeah, but right now I'm on a mobile connection, which is why I've got the problem.
Okay, so before we jump into the crypto prices and crypto stuff and so on, how's traveling with Starlink? Because I thought about going on a travel again and then to buy some Starlink. How's the connection? Can you recommend it?
Unbelievable.
It's good?
It's a game changer. It's a game changer.
All right. All right, you know, I brought a banana. Why did I bring a banana? I brought a banana because we are all asking ourselves one question. When are we going to hit the banana zone? When are we going to hit the zone that everything turns crazy?
So the banana zone, the bananas are currently green on the tree, but they're ripening. Normally, what we see is in US election years, the banana zone starts sometime in the summer, sometimes as late as September, but I think it's starting now. I think crypto price is based this week, and that we should start to see stronger prices going forwards. The banana zone then should accelerate before the US election, that it probably usually pauses a bit while people get confused over the election, see what happens, and then things go really crazy towards the end of the year. So the banana zone is fully in play for me. People just need to have patience.
Okay, people need to have patience. I think that's so important because crypto tends to attract those people that are not very patient, you know. Crypto tends to attract those people who are seeking for the fast returns. And it's so important to have someone like you who really understands the big picture and then can just give us the patience that we need, or remind us to have the patience. May you, for a moment, lay out your macro framework that you have been creating and that has been played out so well so far?
Yeah, it's something called the Everything Code, and anybody should go to my YouTube channel, Raoul Pal, the Journeyman, and watch the video on the Everything Code. It's 2.5 hours long, so it's long, but I'm going to try and summarize it. The world has too much debt. In 2008, we broke the world. Most of the governments around the world got to 100% of GDP in debt, and the banking system failed. We reset interest rates to zero back then, and everybody reset all of their debts on this kind of 3 to 5 year debt refinancing cycle. Now, there's not enough GDP to cover the debts from the private sector and the public sector. So what we found from 2008 onwards, the major central banks just printed money via liquidity, whether it's quantitative easing or other measures. And that printing of money helps pay the interest on the debts. Now, when you print money, you actually debase the money. And when you debase the money, it optically makes asset prices look like they're rising because you're lowering the denominator. So we see every 4 years this cycle where they begin to in year three, they're starting to add liquidity. Year 4, they're really adding liquidity. Year 5 of the debt cycle, they're still adding liquidity. And then they slow down again. and the cycle keeps repeating. So we get this 3 year of liquidity that rises all assets, but particularly long duration assets like crypto and technology. So that is this powerful super force behind almost all assets. There's a 97.5% correlation between the NASDAQ and this mechanism of adding liquidity. Crypto's about 87.5% correlation. It's got less correlation because it keeps having these massive exponential moves. So what I did is, looking at that, I realized, okay, we're actually getting poorer by 8% a year, which is the global debasement rate. That's the increase in global liquidity from the major central banks. And therefore, that was our hurdle rate on asset prices, plus the rate of inflation. Let's say global inflation is 4% for easy numbers. So that's 12% we need to make in our investments before we even break even. If not, our future self is poorer because we're not being able to own enough assets in the future because asset prices go up. We don't make enough out of our investments to offset the debasement. So I divided all assets by the global liquidity and found there's only 2 assets that actually outperform it. The rest don't go anywhere. And the 2 assets are technology stocks because they're in a secular bull market. Tomorrow is more digital than today. And crypto, which is the fastest adoption of any technology the world has ever seen. So that's what I base my everything code cycle on. It allows us to understand how prices move over time. It even potentially allows us to forecast prices in advance if we can forecast these liquidity flows because we know what they're refinancing. So it seems a ridiculously easy framework, and it probably is, but it seems to be working. So I'll go with that for now.
Okay, I don't know if you know that feeling when you stumble across something and you just ask yourself, isn't that too good to be true? And when I go through your thesis and your arguments, they are so clear. But when I just ask myself, if that was true that you're just articulating, and I agree with it, but if that was true, then I should go basically all in technology stocks and crypto, and it would have worked just fine. But do you see any reasons why it wouldn't work out in the future?
At a very macro level, no. And the reason being is, what is the alternative? The alternative is to let the whole system burn to the ground. Nobody's going to do that. They'd rather impose a 8% debasement tax on everybody than they would impose a down 70% bear market on all assets with a massive global recession. Nobody wants to do that. So I don't see any reason why this is going to stop for the time being. Now, we have to solve the problem that GDP growth is not fast enough. That's driven by demographics and productivity mainly. But that's going to take a while for technology and AI to solve that. AI plus robots is an infinite labor force, and the infinite labor force is one of the key factors that increases GDP. But we're not there yet. We're just starting that journey. So I don't see any reason why they won't continue doing this. There's no reason that the global system cannot deal with a 50% bear market in all equities or a falling real estate prices or anything of that magnitude. So they continue on this path. Okay, so how do I know if something has changed in the thesis and I'm wrong, or something has changed in the economy? It's going to be from this cycle to see, okay, does liquidity come in or not? Does it roughly follow the forward indicators? And if it doesn't over time, I don't expect it to be perfect. If it doesn't over time, then we can assess as we go. Why is that not happening? Why is liquidity not coming? Are interest rates therefore going to rise? There's no way of financing the debt without having interest rates rise. Maybe GDP is stronger than expected, and therefore we can manage to finance the debt with less liquidity. But we need liquidity. But either way, let's assume liquidity is flat. Do you want to own a secular bull market, or do you want to own a bunch of cyclical stocks? Well, you're most likely to want to own secular stocks. So we've saw, for example, in 1995, after the big bear market blow up in 94, the Fed cut rates a couple of times and then did nothing for years. It was the best period of outperformance in history of equities.
You're talking
So
about
we don't,
1994, aren't you?
yeah, 94, 95, 96,
Yeah, and
97, 98.
productivity growth increased in that period. That is so interesting because when you look at the chart, you see productivity growth in that period increased. And I think that's important. But on the other hand, following your thesis, wouldn't too strongly increasing productivity growth not be bad for liquidity? Because if productivity growth increases too much, it could even offset demographic decline.
Well, if
Wouldn't
you've
that be
got
like the only thing that could stop money printing?
no, because then you've got faster GDP. And what do stocks do in a faster GDP
They
environment? Do
rise.
well, as long as you don't have too much inflation. So that's the other part of the mechanism. But productivity tends to lead to lower inflation, not higher inflation. It's low productivity
Yeah.
plus government spending that tends to lead to higher inflation. It's like I was just in Australia last week and they've got a massive productivity problem. And you see them, you're seeing the government paying construction workers to do nothing. The person at the building site that has the little sign to let the cars go by, they call them the lollipop guy, 120,000 Australian dollars a year,
Wow.
100,000 US dollars. So that's a problem of productivity, lack of productivity, plus government creating inflation. I don't see that yet. It's all going to be about, can GDP grow? If it can't grow, then you have to add liquidity. That's basically the whole argument.
Yeah, and as we are decreasing, as population growth is going down, as people getting older and less people are working, you even see it in my generation. I don't know about the US, but most people I know don't really want to work full time. They are like, let's try it half time. So that's even putting more pressure on demographic because less people are work, less people participate means less GDP, means more money printing. But then there's not like infinite amounts of money you can print. There's definitely a limit to money printing, isn't there?
Well, we learned that in the Weimar Republic.
Yeah, but
You
that
you
was
get
different. That was different. As a German, I have to say that was different because they had so much debt in foreign currencies. Germany had a lot of gold that they had to repay, so they printed money to buy the gold to repay the debt to
that.
the French ones, to Frenchmen.
That's right. But if you print excessive amounts of money, Venezuela, for example,
Yeah,
the stock market in Bolivar terms goes to all-time highs,
yeah,
but in
that must
dollar
be true.
terms, it doesn't. The issue when you've got money printing in extremis is wages are driven by GDP growth. And if asset prices keep doing that, then all you're doing is basically devaluing everybody's wages versus assets.
Yeah,
So at
that
your age, you
happened.
suddenly
That
can't.
happened. That
Yeah,
happened a lot.
look at house prices for
Yeah,
you versus wages and your whole generation. You look
yeah,
at them thinking, how the hell do we do this?
yeah.
It's very difficult.
I mean, that is basically one of the reasons I do cover cryptocurrency because for me, it was a game changer. I bought ETH very early. I got in 2016. I was lucky, but so many people aren't. But if I didn't get into ETH in 2016, basically real estate from the background I'm from, like normal family, it's like untouchable. It's impossible. So that is
Exactly
why
right.
crypto is so powerful. But okay, basically, there's very high probability that they will keep printing money. I think it is as well like it's like gravity. Politicians have to print money because it solves problems on the short run, but doesn't solve problems on the long run. Basically, the currency would devaluate, but then you're very strong advocating that the dollar keeps rising, and it's true, it keeps rising. So maybe you want to elaborate a little bit on that. Because you would say that
This
if
is
they keep printing, everything has to go into hyperinflation, but obviously it doesn't.
no, and weirdly, the dollar goes up in times of printing, and it gets stronger. The dollar becomes so powerful because when you debase the dollar, which is the world's reserve currency, US assets go up. So therefore, anybody in Europe, they want to buy US assets. Anybody in Japan, anybody in China. So it sucks huge amounts of money into the US system. The other thing is every time they withdraw liquidity, because 87.5% of world trade is in dollars and 50% of the world's debts are in dollars, then suddenly there's not enough dollars. So you can see that from what happened in 2022. Firstly, the US banks blew up, Silicon Valley Bank. Then it goes to Credit Suisse, one of the big banks in the Eurodollar market. Not enough dollars for them. Then dollar yen. The Japanese are the largest part of the euro-dollar market. Suddenly, their currency keeps weakening. Because of this, they don't have enough dollars. And we're seeing the same in China, because all of its property sector and its corporate sector is a dollar borrower. So what it tells you right now is the world doesn't have enough dollars. And so they then have to create more liquidity to get out of this situation. So it's weird, but every time the world is strong, the US does better because people invest in their markets. Every time the world is weak, everybody's short of dollars and they need to pay the interest on their debts plus repay their debts. So that's the real problem. In the golden point of the cycle, when the economy's picking up, inflation's low, and rates are coming down, the dollar tends to underperform cyclically. But again, over time, because there's this massive shortage of dollars and debts aren't going down, they keep going up, that there's always a demand for dollars. It never stops.
It's just an incredible privilege to have the reserve currency. It's incredible. You can keep printing, you can finance everything, and everybody still wants what you print. And you can invest it into your own country like they do, to be leading in AI, to be leading in military expenses, to have the biggest military in the world, and so on. It's just, just getting more powerful. But I've been reading Ray Dalio, Principles of Changing New World Order, and he kind of says that there's as well a time where a reserve currency can, where the status can change. And he's saying that maybe China will rise and they will challenge each other. And maybe the US won't be the leading power in the future. What's your take on that?
Right now, it's impossible to China to do that.
Okay.
Why? Because it's so badly in need of dollars. It's short of dollars. It needs dollars. It can't survive without dollars. It has to sell goods to the US. So the whole system has dollar debt. So if China said tomorrow, we're not going to use dollars, all of their private sector defaults. So it's all good in theory, and you can do it incrementally over time, but you certainly can't move there. Which is why there's a really flawed argument when people say, well, China, the BRICS, they're going to start this new world currency and everyone's going to move. Yeah, well, 87.5% of world trade is in dollars. Good luck. Every time you buy copper, oil, natural gas, any commodity, any food, it's all priced in dollars. Yes, at the margin, you can change that. So eventually China will do trade with let's say, Saudi Arabia for oil in yuan. But they don't want yuan on their balance sheet, so they sell it for dollars. So it's over time, yes, we will not have such a strong reserve currency. But what time is that? Is that 20 years, 30 years? We don't know. But it's not
they are
we need to
leading in
worry about.
technology. And after all, it's always every superpower was superpower as long as they were leading in technology. And that's why Biden was kind of intelligent with all the acts and attracting all the capital and all the movements. Now they're building all the centers and so on. I think you have a very interesting point on Taiwan as well that I've heard you talking about. Maybe you want to give that one, because I think that was super interesting. Because there's a lot of people saying we're going to have world war about Taiwan and so on.
Yeah, so when you listen to everybody talk, they're like, it's just a matter of time before the US goes to war with China over Taiwan.
That's kind of the framework. That's the story.
Okay, so if you were to go to the US people and say, do you want to go to war with China over Taiwan? They will say, absolutely not. The Europeans, absolutely not. Nobody wants to go to war. If you ask the Chinese, they're like, no, nobody wants to go to war. We can't afford it. And this is not a good situation. So it therefore suggests that the most likely outcome is going to be an ugly compromise, because every other equation is so catastrophic we don't want to do it. Okay, so what is that compromise? Well, very interestingly, Gavin Newsom, the governor of California, suddenly turns up unannounced for all of us to Beijing. The US and Beijing were having a really rough patch, but Gavin Newsom turns up. Now, ordinarily, he should have had a meeting with like the head of a region, because he's the head of a region. No, he gets a meeting with Xi. Xi, while the US and China are kind of having a verbal warfare with each other and trade disputes, Gavin Newsom turns out having a meeting with Xi. The next thing is Gavin's like, hey, come back to my place for drinks and get Xi over to California, not to DC, not to the United Nations, but to California. You're like, what the hell was that? And she was meeting with tech people. There is no reason he would be involved in trade negotiations over Tesla or Apple's footprint in China. It's not for him to do. They've got trade delegates for that. The only way you can get Xi to do that is if Gavin Newsom said, let's talk Taiwan. We will allow you to have it. But Taiwan is incredibly important to two of us for different reasons. One is you want it strategically because it was part of Greater China. Fine. But you also want Taiwan Semi, which is the world's most strategically important company. It makes 90% of all semiconductors. And we're about to go into a world of AGI. And he who controls the chips controls the world. And they're like, the US are like, we will go to war over these chips, as will you. So there is only one answer here, which is you let us build these Taiwan semi plants. Germany's building one, Japan's building one, and the US is building 3. Let us complete those, and then we will orchestrate a de-escalation and a handover of Taiwan, even though it's not for the US to hand it over, but it's like, we will allow you to do this. Okay, that's very interesting. And that feels like that's right. The next thing, Janet Yellen goes over there twice. The US need dollars. China needs dollars. The US needs buyers of its bonds. So Janet Yellen's over there. The trade delegation's been over there. So there's a lot of conversations going on, which is let's try and sort this out. As soon as she gets back, the first thing he did was go to Europe. And he went to see Macron. And Macron obviously gave him a bunch of trade demands, said, listen, we need to sort this out. But if the Europeans were to agree to this grand settlement over Taiwan, what do they want in return? They want Putin to stop advancing in Ukraine. So she goes back to China. Next person to visit him, Putin. Putin immediately leaves. Once he leaves, the first thing he said was, well, the bombing of the concert hall actually wasn't Ukraine. It was probably ISIS. Now, ISIS is the enemy everybody can blame because it's everywhere and nowhere. So that's a de-escalation from Putin. Then coming from the news wires, not from kind of weird conspiracy people, but from like Reuters and AP, is there were many senior people in Russia saying, we are prepared to just keep the ground that we've got and talk about a splitting up of Ukraine. So we're happy. And it's still not a great compromise, but therefore nobody has to worry about Poland or anything else, any advance. That's the thing the Europeans wanted the most. And she's going to deliver it to them. If he delivers it to them, then they will back this idea of Taiwan. Europeans have already got a chip plant being built in Germany. So they're taken care of in this equation. So that is my view. My view is that we have a path to a potential peace that removes the largest conflict point in the world, potential conflict point. Now, there'll be economic warfare, of course. There will be other forms of the battle of the giants, but the chance of a kinetic war, I think, have dramatically gone down. And once people realize that, and that may not be, for another 2 or 3 years, I think the world gives itself a peace premium, which, much like we had a peace premium after 1990, after the Berlin Wall came down, we had a peace premium. I think that's likely to happen.
I think that's so interesting because the argument was pretty good that you just presented. I think war always happens when one party thinks that they will win. But when neither party thinks that they have pretty good chances right now at winning, then you need to compromise. And what you just outlined kind of seems like a compromise between US and China saying, we don't want to go at war with each other, let's sort it out. And then let's sort it out with Ukraine. And then you're right. I mean, let's just imagine the whole bear market kind of started as well with Russia attacking Ukraine. Just imagine that thing gets sorted out, like you just mentioned, that would be extremely
I mean,
bullish.
it won't be a perfect solution, right? People won't be happy because you'll
Oh
split
no, they will
Ukraine.
never be. They will never be. But at least the risk of this escalating would decrease, and it's priced in the markets right now. So that would be like, wow, you don't have that conflict anymore. If you saw Taiwan, that would be super bullish. I've heard you talking about the biggest risk you see is actually a super bubble forming, and I think that's so interesting because there's two things that I have in mind right now. Number one, what happened with long-term capital asset management, that you had a systematic player that collapsed. And then they started to turn on the printer, and that money printing was fuel for the dot-com bubble, you know? So maybe we have something like that, but then we would still have a bubble. And I've heard you say as well that we might get a really big bubble. Maybe you can elaborate on that.
Because if two things, one is people understand the game that's being played. People still fight the narrative that I've got about this everything code. But if people agree with that, then you see, and people understand how big AI, robotics, genetic sciences, EV technology, and all of these exponential age technologies, it's going to suck in an enormous amount of capital. If you then give it the world a peace premium, then the chances of this becoming very big. Now, is the bubble cycle, this 4-year cycle, or the next one? My guess is actually probably the next one. It's kind of going into that 2030 is when I think we kind of go too far. But let's see. It could be this cycle too. And we could, let's say, as opposed to having a large correction in technology when liquidity is withdrawn, let's say we have a sideways to down 20% bear market for a year, and then it takes off. Well, then, if that's the case, then it's going to absolutely explode to the upside. Because if you think of the speed of what's happening with AI, the speed of what's happening with all technology, it's going to suck in all capital from everywhere.
Yeah, that would be my question. Like, your thesis is very strong, and I think it's very difficult to argue against it because currencies have to devaluate over time. The US is leading, everybody's short of dollars, then they have to print. When they print, you have that 8% debasement every year. On top, you have productivity gains of technology. On top, you have crypto as one of the fastest growing asset classes and the adaptation curve and so on. But then there's the question, why isn't everybody doing it? You know, like, because the arguments are so strong. So why is there still out so many people who don't invest into tech stocks and into crypto?
Because it makes a mockery of the study of economics. Everything that they thought, they've built these complex models that don't really work.
They never work.
So
That's why we do collective intelligence. They never work.
That's right. So now we've got the business cycle and the liquidity cycle completely dominating everything. And people don't want it to be that easy. They don't want it to be that easy. They love complexity because it makes people sound smart. Simplicity, they think is stupid. But the simplicity seems to work extremely well. You know, that whole bell curve meme, you're better to be on the left side, which is number go up. The right side of that is number go up as well. And that's because you understand all of the mechanism that's at play. Everybody in the middle of the bell curve is arguing why the market's going to crash, why everybody's going to go to war, why money printing doesn't lead to liquidity that gets into the system, why the plumbing doesn't make that happen, all of the stuff that we get. But the number go up. And, you know, I just think it's a very, very powerful force that people don't want to believe because it questions their belief system. Because most people actually, a lot of people love to see stock market crashes. It's like this weird thing.
As a content creator, I know that when you put the crash is coming into the thumbnail, you will just get more attention, you will get more attraction and so on. So I think there's like as well this negativity that is because of social media very strong. But yeah, this is going to be so interesting. I really think that's interesting what you said. So there's two scenarios. You think we will have a gigantic big bubble because of AI and the technological progress and the exponential curves, and so that will just be so strong. But you say it will maybe not be in this cycle, but maybe in the next one. So my question for you would be, because I thought that maybe this was the last Bitcoin cycle, you know, because I thought like, okay, now we get institutions with the ETFs that are being onboarded. So who else, which bigger player, you know, could get into the market to push Bitcoin prices? Let's say we go to 150,000 a cycle. So which next bigger player could push Bitcoin prices to, I don't know, the next level, which will be maybe 300,000 or 1 million, you know? So that's my question. Like, do you think we're in the last Bitcoin cycle? Or do you think Bitcoin will still be interesting as an asset class after this cycle? Because in the end, I think Bitcoin will only go up like gold once the adoption curve is completed. It will only go up with 8%,
Yeah, but
like gold.
to get the adoption curve completed, you need to be at like 4 billion people. So right now, crypto as an asset class is $2.5 trillion. If I just use the log regression channel of Bitcoin and just project out the growth rates of crypto versus the internet and assume it slows down massively from here, it gets to $100 trillion by about 2032. Now, $100 trillion, we throw around numbers like 100 trillion. Yeah. Got to understand, $100 trillion, we're creating $97.5 trillion of new wealth. That is the largest generation of wealth in the shortest period of time in all recorded human history. When you understand that the S&P 500 is a $50 trillion market cap, and that took 100 years of value accretion by the US economy and those companies, this is double that. We've never seen anything like it. So it's an extraordinary opportunity. Now, of that 100 trillion, will Bitcoin be 50% dominant in that market? No. Because to get to 100 trillion, we have to be using the whole blockchain infrastructure for things like the finance system, for Web 2 businesses, for all of the other elements, not just the moneyness element or the store of wealth element that Bitcoin has. So if the world were 100 trillion, what is the value of Bitcoin in that? Maybe it's 20 trillion. Maybe it's 15 trillion, whatever that number is. So it's the overall space that's going to see the growth.
Yeah, that the potential is pretty huge. The one thing that I really love about crypto, but then I really hate about crypto, is I think it's an equalizer for my generation. One of the few opportunities for my generation to get into the status where you can have a wealth, because of course, when you don't have wealth, it's impossible to build up wealth, especially when, like you mentioned before, asset inflation is higher than what you earn on your income. Then when asset inflation is higher than income growth, it's impossible to really get wealthy. So that's what I really love about crypto. But because it's an equalizer, you can front run the system, you can front run central banks and so on. But what I really don't like about crypto is it seems to attract a lot of bad people in the way. It seems to attract a lot of people who are just scamming other people, who are using a lot of illegitimate techniques to sell a lot of shitcoins and so on. So I kind of feel like there's so much bad or criminal energy in the space. So how do you reconcile yourself those two fronts?
If it is the fastest accumulation of wealth in all history, it will attract all sorts of people. Now, when you talk about the gold rush in California, there was these wildcat miners, there was the scams, the crooks. We see it in the oil and gas business. We see it in the gold business. We see it on the internet everywhere. The Nigerian prince scam is just because the internet allows money to move more freely. So of course we're going to see it in this space. And it's very difficult to avoid it. Whenever there's a large increase in money available, you get criminality. We saw that in Russia after the Iron Curtain came down. We see it in China. We see it everywhere where there's access to new money, it has bad actors. That's always the case. And that's what regulation needs to be for. That's what, we need to get better about dealing with. We're just so far behind being able to deal with these kinds of people so far. But the great thing about the on-chain world is everything is trackable and traceable. We can figure it out.
There's one thing that or basically two things, and then we get into the questions that I kind of want to know. I think the biggest scenario or the biggest potential, and I've been reading what you wrote about that too, is the combination of crypto and AI. Because crypto, in most cases, is not very user-friendly, but of course AI doesn't care whether it's user-friendly. So what do you see is the potential of the combination of crypto and AI? And then what do you think about real-world assets?
So I'll think about there's two layers to crypto. There's the blockchain and the tokens themselves. So the blockchain, incredibly useful for proving who's real and who's not. We've seen Sam Altman start WorldCoin. This is based on this premise: is like you won't know who's an AI and who's not. And blockchain, being an immutable ledger, is a very good way of doing it. It's a way of proving humanity or proving AI or whatever it may be. So I think that's a very big deal. We will all have a digital identity that will be on blockchain to prove that we're human. The other side is AI is moving to a world called agents. AI agents are sub-AIs that do work. Now, hey, build me a deck, edit this video, do this for me, do this expert piece of knowledge. It's much like going on to Fiverr or something like that and paying people to do that work. These agents that get built either by AI themselves or by other people, well, AI is not free. There's compute and electricity. So how do they charge? And many of these will want to make a profit. So how do they charge? Well, last time I checked, AI doesn't have a bank account. Well, it can't. It hasn't got a driving license. It doesn't have a proof of address. How's it ever going to get a bank account? It can't. Also, because of the payments are micro in both time and price for these small acts, the entire system of money doesn't work for it. It's too slow. It's not small enough. It's not fast enough. So blockchain is cryptocurrency is the obvious answer of how agents to agents work. And as you say, they don't care about the UX, but what you have is an immutable ledger of the transactions. So that's where I think the big use case is machines will use digital money. Of course they will.
It's so interesting. I remember us talking about that the last time we had a video call, and I was like, do you think it's possible that one day I'll just dictate a YouTube video into the microphone and then it will be artificially created? And you have said something like that you've seen something very similar to that. So I know that you know some things that maybe I don't. It's incredible how fast technology can move. It's just stunning. So what do you think about real world assets?
Real world assets on blockchain.
Yeah.
There's a big movement in the property sector to do this, but the interests aren't fully aligned. It's really property guys trying to get more liquidity out of individual retail investors. But retail investors, do they actually want to own a hotel in Aspen? My guess is no. So I'm not sure the property sector is the big lead here, but real world assets, certainly the financial market, bonds, equities, all of that makes total sense. Cars, this stupid idea of having, your deeds to your car and stuff like that. You want to sell your car, it should be able to attach with the insurance, attach with everything, and I can transfer it to you immediately in a smart contract. Sure. We've already seen people experimenting with that. We'll see a number of real world assets, I think, come on chain. But I don't think that's the big thing. I think the digital assets, things like our identity or stuff like ticketing, these are huge volume things. Advertising, these things can all go on chain. People think of like physical thing because that's the way you get to speak to a boomer about it. Like, oh, you could tokenize a house, and they're like, oh, that's amazing. That's really boomer talk. The reality is, it's the digital world that you live in that's going to get that's going to see most of it. So now when I was a kid and I would go to a concert, I'd have a ticket. Now it's all on our phone app. In future, it'll be an NFT. And that NFT makes it resellable. And maybe it automatically pays a commission to somebody in the middle of that because it's in the smart contract. But maybe I went to the best concert of all time. I was at Live Aid in 1985. Maybe I then own the NFT of that. I actually have the program and the ticket. But let's say it was now and I own the NFT. Well, that NFT is valuable to people because it was an iconic moment in time. So now my ticket has a value, not just in the secondary market, but the tertiary market after the event. Think about all the hotel rooms in the world. The amount of times you travel somewhere and then you're like, shit, I need to change my plans. You can't get out of your hotel. You know, suddenly you've lost 300 euros in your hotel room. Now, what happens if hotels were NFTs or your hotel booking was an NFT? I could then put it on a marketplace and say, hey, I can't make it to New York this weekend. Here's my ticket, 50% discount. Somebody can buy it off of me. That's great. That adds liquidity to a system. It's kind of like the Uberization of the world, where you can fractionalize a whole bunch of stuff and release trapped capital in a whole bunch of things.
It's interesting. There's one topic that we didn't cover, and that was inflation. What is your opinion about inflation on the short run, like the next 3 to 6 months, and then maybe the next 1 to 3, 4, 5 years? Because there's so many people saying that inflation will be structurally higher. And of course, if inflation goes up, that is a big problem for everything. Interest rates, money printing, and so on.
So I believe inflation continues to come down for a while, and then the business cycle will mean that inflation picks up. I do not believe that we will see a large inflation impulse. We had some because of unique set of circumstances that happened in 2021, 2022, which was people coming out of a pandemic, all rushing to buy stuff, do stuff. None of the factories ready for it. Massive supply chain disruptions. Inflation goes through the moon. Then on top, you add the Russian invasion of Ukraine, right? That particular set of circumstances is highly unlikely to happen. Can inflation remain higher than it has done because government spending drives it higher? Well, you see, the issue I've got with inflation is if you've got, elderly parents, they spend nothing. And the whole population of the Western world is elderly. They spend nothing. Even if they've got a lot of savings, they don't know how long they live for, so they tend to reduce their expenditure. So you've got less people in the workforce. Maybe those can command higher wages for a bit until the AI reduces that. But aggregate of the total economic demand, you're removing the richest cohort of spenders and replacing them with the poorest cohort of spenders. Okay, well, that's not going to offset each other. When they were both in the labor force, okay, that's very different, but they're not. So I'm not a big believer in structural inflation. I think over time, inflation is probably, I think we'll have deflation as the major force because of technology. Now, whether we get a rebound this time around in inflation a bit, probably, but I don't think it's a major force. And everyone's going to freak out thinking it's going to come back and it's the 1970s again. But the 1970s can't happen because we don't have a population boom.
Yeah, that was basically it. There were so many people getting into the labor market. There were so many people trying to get a house. There were so many people starting to work, starting to consume. You could theoretically have a emerging market, like all the emerging markets, when those people get more and they start to consume, because China has been saving, for example, and that was deflationary. I think it's so complicated, but I highly agree with you that old people save. Old people don't spend money. There's as well a lot of people who say that when the boomers get into retirement, they will sell all their assets, or at least they will diversify from stocks into bonds. But I know as well someone who said that they analyzed it, and the conclusion was that basically those people who own all the stocks, for them does not really make sense to sell because they have so much. Like the distribution of the stocks is very much towards the very, very rich. So they wouldn't
Exactly.
sell. But yeah, then there's the next question. It's very important. Solana ETF. I mean, we've already been talking about the banana zone, but Solana ETF, that would be crazy, wouldn't it? Do you know anything about
Well,
that? Do you have any
Vanek,
insights?
just as speaking right now, Vanek have just filed for it.
Oh, they have?
So just just before you and I got on, they've just
So I'm
filed
gonna
for it.
buy some more Sol then.
You should always be very long sold.
Okay, let's talk about that. Okay, so you think the Solana ETF is going to happen. So can you please maybe let's get some personal stuff from you as well. Like I've been hearing you say that you've got like 90% of your portfolio in Solana. Is that true? Like you
Yeah,
put 90?
yes. And 100% of my liquid net worth is in cryptocurrencies.
I know. Seriously?
Yeah,
Like
seriously.
100? And do you have real estate? Do you have land? Do
Yes,
you
but
have?
that's not liquid.
Yeah,
So
yeah, I
yes,
know.
I mean,
But
yes, I have real estate. You know, this is my house in Little Cayman. I have,
like you own all that stuff, you have real estate, but you don't own stocks then? Like when 90%, 100%?
why? When I divide the Nasdaq by Bitcoin, Nasdaq's down 99.97%. What's the fucking point? You just own the strongest asset. If
Oh
everything
my
is
God.
correlated and driven by the same forces, you end up with a logical conclusion, which is you only need to own one asset, which is crypto, which is bizarre. And then the game is okay, which crypto is outperforming? You do charts of anything versus Bitcoin and anything versus Ethereum. And if anything looks like it's breaking out versus those, that was Sol. So now my job is to look at anything versus Solana.
Yeah,
But Solana's a
there's
big
not a lot.
project. So if it's a small thing, maybe whiff or one of the memes, I'll have a
Yeah.
small position, but I won't put my life savings into it. But Solana's big enough, has big enough network adoption effects for me to say that's fine.
So basically you're saying 100% of your liquid net worth is in crypto, 90% of your crypto is in Solana. You have some smaller projects where you put some into. So there was one question from Maximus that was really, really good. You know, we've got the liquidity cycle, and then everybody assumes that in June or July next year, the liquidity will top and then it will go down again. But of course, more and more people know that. You talk about it, so I know it. A lot of people know it, so they're gonna try to front run it. So when do you think is a good idea to take some crypto profits?
So I didn't take profits last cycle and I didn't want to because I've found that just holding over time, even though it feels dramatic, holding over time and adding when it sells off actually is the way to compound wealth
Yeah,
because you
that's true.
don't because if not, if you've gone in a bull market from 1 to 10 and then it falls 80%, you won't put 10 back in. You won't because you're more risk adverse and you're like, I can't lose everything, right? Your mind will play tricks with you. So you just leave it in and just say, okay, I've got a longer term time horizon. But for those people who want to cash in some lifestyle chips or de-risk, then, you use some time like the end of the year, beginning of next year, you cash in a bit of money and then just ride the rest. Now, does it peak early? We don't know. Does it peak towards the end of the year like it's done in every cycle? Possibly. Do we have a blow off top? Possibly. I don't know. We can't really tell. So you need to set yourself up in advance where you're not hoping for the blow off top. You've taken some money off. And if it does blow off top, you can take some more off. If not, you just keep running it.
Um, would you recommend selling everything in the end of the year, basically, or would you say
No.
I cost average out of it, or you just sell 80% of it, or
I would say if you're under the age of 30, you should do, or under the age of like 35 or something, you should do nothing. Unless you've got enough there that taking 25% off can buy you a house or something that you really
yeah,
need.
life-changing opportunities?
Something life changing that secures your life and ratchets you to a new living standard. If not, you should do nothing. You should just be thinking, how can I buy more when it sells off?
Okay, so we've
So
got
I
one,
figured
one,
this out.
yeah,
I traded it. I traded it over the years. I've been involved since 2013. And I figured out, I traded it pretty well, but I figured out if I'd just held my original investment, I'd have been 5 times better off. And if I'd have just
yeah.
bought every dip by adding the same amount as my original investment, I'd have been 25 times better off. That's how you compound wealth.
Yeah, we've got 1 minute left. So there's one last question I have. Do you have some alpha idea that you want to share with us? What is in your mind right now? Do you have anything?
I gave you a hint before. It's a very powerful trick and people don't understand it. If Solana is the most powerful asset of this cycle, okay, of the major cryptocurrencies, you will, in the banana zone, be wanting to throw money at all sorts of other stupid shit. The way to hold yourself accountable is show and prove to yourself and anybody else on a chart that it is going to outperform or it is outperforming. And most people, you can't. Most of the ideas you have don't outperform the best asset. And it stops you overtrading. It stops you doing stupid things you shouldn't do because your friend told you, hey, if you looked at this new coin, it's going to be amazing. Unless you've got real evidence of a sustained structural outperformance of Solana, don't do anything.
I think it's really powerful advice, Raoul. I really appreciate your time. I'm looking forward to doing that another time, and let's hope we all get very bananas.
We will have the bananas, I'm sure of it.
All right, thank you. That was really, really cool.
Thank
I'm
you.
gonna get back to you then.
Perfect.